Bling, that's right. The price is wrong. Welcome to Tradespotting. I'm Jimmy. Today is Tuesday, the 12th of October. This is a busy apes quick recap for the technical analysis on GME and AMC, covering today's price action and what we can look forward to tomorrow. It also means that today is Tadpole Game number 2. Tadpole Games! Tadpole Games forever! Welcome back to Tadpole Games Tuesdays. It'll be kicking off in a couple of hours, but not as part of this stream. This is a very professional stream for those very professional busy apes who don't have time for the long view of things. Hello, Eddie. Hello, Undead Doomslayer. Miffle Miggle Diggle Till RIP. Yo, yo, yo. And Manifest Density. That's all I see at the minute. That's great to see something, though. Thank you very much for joining me. Let's get any requests. Anyone wants me to look at anything, get them in quick, because it's going to be a wham bam swing bong type of episode. Tadpole Games 2 tonight. Tune in for Tadpole Games 2. Make sure you're there. It's better than it was last week. Likely not as good as it'll be next week, but it's brilliant. If you miss it, shame on you. Into the charts. This one is GME. Look at that. Glorious. It's done this breakout move from this wedge. It's looking like it's testing that breakout zone. It's doing what we suggested it might do on the RSI. Coming back down again. Let's see if it can reach above the center line. It's come up to 188. The area you're looking to test is the 200 period moving average on the 4 hour at 196 or thereabouts. After that, you'll be breaking the golden pocket and aiming to downward sloping supply lines. That's the 4 hour time frame, which things are significant on and haven't changed much since yesterday. Structurally, there's no higher high, there's no lower low. It's just a continuation of this trend that's already in motion, no change of direction. And we can see if you break through significant levels on the 4 hour, that's 196. Let's drop down to the 1 hour and get a better picture of what's happened. Well, we had those highs yesterday. We tested that 200 period moving average on the 1 hour time frame, dropped back down over a series of negative candles that took us into the 50 period moving average. And normally when you break between one, test another, don't break it, you'll come back and test that previous one. And those are significant ones that those sort of things happen between simple period moving averages, 50 and 200. Here's your golden bucket at that area above. We didn't quite make it there. Hourly, you can see you got body closes just above the 382. That's at 184, spot 35. The more of them, the better. Having hit it a couple of times, you could imagine it would be weakening. We're below the 236 on this previous Fibonacci, and you want to stay above that. Though there are a number of reasons why you might drop below it, including a test, having first broken through it, a little bit of a test. And let's see where price action goes tomorrow. It will be interesting for the rest of the week. On the hourly time frame, you can see that you would take a little bit of a dip there based on what we were talking about on the RSI, and you come in, hit your own moving average and follow this path down. That doesn't necessarily mean price breaks below other horizontals. It can all constantly do little things like this here. This we test up and pull it, up to certain levels or keep it above other important ones. And the one you want to be keeping above here is 169 and change. It's not desperately important, but it is the next one in front of you on that side of the target. It's also in and around where your D point might be. This could be an extended harmonic, what you see here, with slightly lower points to target, but that D looks good to me so far. You would have expected this kind of test. The 50 period moving average is where it is, and that dictates horizontals from that side of things onto the smaller time frames. And you can see it looks lovely jubbly there. You tried the 200, broke it, testing below the 50, but 30 minutes, that's not exactly a real significant indicator of your trend. Your higher lows and your higher highs, and that looking left, seeing, well, there's significant areas, nothing to do with Fibonacci's or moving averages, just a simple price action is put in horizontals that you'd likely pay attention to, and 185 is one of those. Number of above it, but on the 30 minutes is one thing, getting it on the 4 hour is completely different. And we didn't manage that, as you can see. That's why these time frames are significant, and why I say I'd like to see open closes opens. That means, and I say it on 4 hour time frames, it's because of the nature of this, right? Just keep you safe when you're making your trades. So that's the GME ETA for a busy ape. So we can go down and see there maybe what we'll look to see to happen tomorrow with a touch of the test of this area on your indicators. Let's see if it holds these or if it gets a different area to pull it up, if that's a horizontal running along underneath us, or a diagonal coming from these points beforehand, of which we've tested it a couple of times now. I mean, if you really wanted to, you could draw a line on here and say, like, you've got a couple of touches, maybe 1, 2, 3, 4, with a higher high within it and then a higher low and the same structure. That's positive until such times as it isn't. You would like to see it above 180. And if you can get above 180 and open and close a number of candles there, it might not be as dramatic an increase as this, but I would expect us to test the similar levels, 185, 186, and that's where you're aiming for. Subsequently, you'll be looking at 196, and then on the top side of that, you look to your 786 and your 886 as previous Fibonacci. If you get above those zones, let's just up around 210, then you'll look at your horizontal resistance along with your downward sloping supply line, and that perhaps comes in at around 220s, and that level. Get above there. There are other areas of interest. Looking left on smaller time frames, you can see this A point of the previous harmonic that we're looking at, working our way through the 168, which is the target of that Gartley. Should it get up here, that's around $255, $256. And the nature of how the RSI has performed on higher significant time frames, this fallen wedge that breaks out of retest and goes on and puts in highs within this formation on daily time frame, I expect would continue. Thanks very much for that donation. The Ghost of Dan, $4.99. It's much appreciated. Need more high numbers on the GME. So this is what we're talking about here. Back up to the daily time frames and looking for bigger moves. These are the steps that you'll need to take. If you can break those horizontal resistances, then you'll be looking to perhaps this level where your isosceles triangle reaches its termination point, or perhaps it's a different formation, and that would be just the lower level of diagonal demand coming in around these dates. This is the 10th of December. This particular Fibonacci time zone crosses into a new level. At this point, you might be thinking that area, those first few weeks in December, where is price action by there? If it's done all these other things, then the top levels you're looking for above 255. If you open and close 4 hours there, more significantly would be these daily candles at this level, when you've already struggled to put in a succession of daily ones and like use this area as significant and obvious support. Whereas on lower time frames, even on a 4 hour, even less so, so the daily time frames, like you're sketchy up here. I'd want open and closes on the weekly at that level, but that's a number of weeks away, and so that adds to the window, the difficulty in defining when that window will open and slam shut. I'd suggest that the open side of it is when you got your entries there, Dan, and that we're looking for something to push either towards the top side of this ascending triangle, which would be $333, or we're looking for extensions on that move, and the top level of resistance $480 on a weekly time frame. You might get an extension there and then retest lower levels, 343, and open and close on the weekly time frame above 343, and then this I at that stage I would have already expected a test of $500 or close to it, at least 490, before it comes back for a weekly 343 retest. At that point, a lot of people will shit the bed. They'll lose everything, and the opportunity, thinking that they could have traded this. If they're holding shares and then flipping out at resistance, then they'll probably get burnt, because the retrace might not be, certainly not the whole length of this channel. It might not even be at the midpoint. They won't know where to enter because the retrace won't be obvious. Whereas if you are holding a different instrument, you might be able to get out and do excellent things in and around here and add to positions when there is a bit of a pullback towards the 343 area. So bear that in mind. And how does this formation work? If it's an upward sloping channel, that's not necessarily all that amazing. You could just see it go on for a long time, which would be great over a period of time. But if you're MOAS orientated, then that's not necessarily all the answers you need. You'd prefer it was an ascending triangle, and rather than just complete its own measured move, that measured move you could take from various different places. But let's see, it's in here. That's the channel. You get the top of the ascending triangle, it takes you up to a different sort of upward sloping channel, or continuation, pardon me, of the upward sloping channel. But if you do like a bull flag and you say that that's the sort of move here, and you go to the top of the ascending triangle and you're like MOAS inclined, you might think the measured move of this thing takes you to $750. I'm more inclined to think that that would be a later stage of some continuation of what would already be discernible as a linear progression, which would only be confirmed like in retrospect, but that which is already presenting some behavior of. And so maybe this upward target of $500 is like 490 more managing your own expectations, and that it would be more sensible from the mentality that a trader would come from, would be to be like looking at these targets, 500, 330, 343, and then those smaller ones alongside here, because they'll be crucial for managing your risk and seeing how position evolves over time, which it does. Any position is subject to change over time, whether that be like option contracts and you're looking at theta and decay in value in that way, or you're looking at changes in the Vega, in which case that'll happen too, depending on the characteristics of price action over the time period you're looking at. So that's what we're looking at with GME on the small time frames, what happened today, what we might see tomorrow, and then a slightly bigger picture of what we could be looking at, not in any particular time frame, but should we go through those steps? That's GME. Right, on to AMC. Thanks very much for that donation, Dan. It's really appreciated. So then you've got AMCTA. Where's all my drawings gone to? What you like. Here we are, right? Trading View. Taking it easy today, are you? Dumbass. Right. So Rocky's got a fantastic looking harmonic on there, and the extension on that, just a D point. Let's see. It's not really the target, it's just the D point. Comes in around $84. We're on the weekly time frame. How do you get there? You go through the up to close to the 1272 extension on this previous Fibonacci. You could even suggest that goes slightly further. They've got, or maybe not, like we'd have to measure it out actually, to be honest, and do these tests. Anyway, how do we get there? There's a number of steps in front of us. You've got, it's not yet as definable as decreasing momentum on the weekly time frame, though you're still on the Rocky Outcrop DMI. You're obviously, your ADX is still in a strong area up here above 38, $40. 40, not bucks. Jeez. And then you've got your DI positive slightly winning there and perhaps coming in for Rick and Morty's on the weekly time frame. That would be significant. You've got 3 lower troughs here on the weekly time frame throughout this formation. Those 3 weekly troughs are relevant on that time frame, though they're not drawn for that particular characteristic. I'll talk about them in a second. You've got a positive cross your 50 period, your 200 period on the weekly time frame. It's significant to see that price action will test one or both of these moving average at some point in time. That doesn't necessarily mean price goes to them. It will be that prices start dropping off from how this average is calculated at these low dot levels are around $5 shortly, which will lead to a positive slope on this and even steeper incline, and it will meet prices, assuming they themselves don't go crazy in the immediate future. And let's talk about more immediate futures on now. 3-day time frame, you can see still there's these 3 lower troughs it appears to be, and that itself would suggest that the move might be extended to its downside potential. Top side, you've only actually got 2 that are like significant within this formation. Now you have putting in a third here. It hasn't turned around yet, but you would say you're there testing it, making it happen at the minute on the 3-day time frame. This 50 period moving average here comes in at your low level of support at $32. That's adding to the floor. That's really positive. You can now take that if you're an AMC fan and think, well, those hype songs and all the videos about the floor is rising. Well, now you've got your trend, your significant long-term serious tradable trend. No one can call you a fucking meme trader if you're entering off a 3-day 50 period moving average. That's sensible trading. That's a proper trend check. That C point on this harmonic looks like a great entry. It is for loads of other reasons. And since then, you're trying to fight for that 236. Today, you've been down 1.15%. That's not a significant amount. That is in part due to the fact that there was increased liquidity to take advantage of for the short positions. I strongly recommend if you're into AMC and you've been following AMC YouTubers and that, fantastic. A lot of respect for them. They all do a lot of hard work. Great. But you pay a significant degree of salt, a pinch of salt, like quite a big one, with any information as with regard to the short interest over tiny periods of time. It is often reflective of the fact that in today, the way the markets work is long is short and short is long on the market maker side of the trade. So if prices go up, then that'll have increased volatility. That adds to the underlying value of the asset, which means that there is then a bigger number of people that have that side of the trade who are in profit. They'll hedge against that trade. Potentially that has ramifications that lead to more shares available to borrow, or those shares being made available being exploited and put to use in order to hedge against those positions. So I would take that as a grain of salt, and I suggest that you tune into Tradespotting and Rocky Outcrop and learn about these nuances in a way that will help your trading, or at least your way of approaching these two particular assets. And I would suggest and repeat that once an asset hits a 50-period moving average on a 3-day time frame in the middle of an uptrend, it's not a meme trade, it's not a meme stock, it's a sensible move, and that will be taken by large liquidity providers as a signal to them. A profit signaling mechanism is every one of you guys who's trading this thing and holding it for ages. They know that the upside on it's significantly higher than it is if you look at it exclusively from a fundamental analysis perspective. And as you can see here on the 3-day time frame, we were talking about that momentum, and it is weakening now. You can see that coming through. Potentially your MACDs are close to or crossing the signal line soon after they both reach below the center line of this indicator here. It's still struggling to get above the center line on the RSI, but you can see the 3 lower troughs, and the Rick and Morty kiss is really coming in now on the 3-day time frame on the Rocky Outcrop DMI. There again, you've got a bit of flux. We'll see how that evolves. This is starting to look more like the psychology of what I expect to be happening in the market here. It looks a degree like a head and shoulders now that your right shoulder is higher than your head. You want to recover your own moving average and the center line. That would be very bullish if price action was also breaking a horizontal level. That level to break is 41.44, and above there you're looking to go up and test $50. I expect that's what's going to happen. We've only made it down to the 2-day there. Onto the daily time frame. Here's your 200-period moving average coming up here to say hello. On daily time frame, it's hard to define something as even in an uptrend if it's not above the 200-period moving average. So for anyone to tell you, oh, you're still trading AMC, right? They don't know what they're fucking talking about. It's absurd. It's an obvious thing to trade. When it's above the 200-period average, great, right? It's tested it and goes on. Fucking unbelievably beautiful. It does tests of other ones like the 50 on other, and it doesn't even get close to the 200. That's bullish, right? So when people tell you like, oh, why are you trading that? Like, you just tell them shut up, or we can't advocate hitting them with a wet fish on YouTube, because that would be wrong and probably against the terms of service. So I wouldn't suggest you do that sort of thing. Hello, this camera now, isn't it? So what do we make it to? Daily time frame, AMC, potentially in this harmonic deep point there, which would then come with a move, a retrace of probably of this level here. Is where you're aiming to, and I don't know how you want to handle those things. The significant level to pay attention to is $50. That's where you would manage your risk or manage your position. It's how do you handle this? It's up to you. Don't let anybody tell you how to trade. That's your decision. It's your money. And refer back to that wet fish idea if you do find people putting you in that position. So we're on the daily time frame, and you're looking to hold this 236 here, which you did very well. You're looking within this smaller harmonic and see how Fibonacci, and see how far it takes you up towards that D point of the harmonic. 236 is important. That's at 37.03. Closing a Tuesday below it isn't a really significant deal. You put in this potentially doji in on Monday. On longer time frames, that then looks like indecision at the bottom of this pushing down, which will lead to a pushing up again. You're not far from the 236. Your wick on that is bullish, having put in 2 in a row. Could have gone either way. Tried to the downside, failed. Next, it'll try to the upside. You look at the 382, that would take you outside this downward sloping supply line. I'd expect it to go and aim for the 618. That's at $39, and that's down at the daily time frame. You're looking at that sort of target. You can see you've got on your 4-hour positive slope on the RSI, and you've recovered above your own moving average. You're aiming for the center line. That's fantastic. In your MACD, you can't really see it there, but you're weakening momentum to the top side. That might just be because, like we say, you're coming through the end of this down push low. It's come in with like what potentially could now be a higher low. It is a series of lower highs, and like the momentum to be dying off to the top side isn't actually really. It's just that part of that move, and it can pick up a bit again. Like here, it dried down, right? But it never really crossed down to being a negative momentum. It just continued again after that huge push down here, right? Up once, inflection period, started a downtrend. All that did is take an edge off the positive momentum. And when they buy again, the momentum will be again to the upside. And having recovered this moving average within this Fibonacci, the 618 being where it is, if you recover that, you're looking at the 200 period moving average, and that's around 41, 44 again. That's that horizontal. It's really important. It does well around that level. If you don't know why, refer back to the earlier part of the TA about AMC. Here's that downward sloping supply line. It's really obvious on the 1 hour. You've got increasing momentum to the downside, but is this the context of an uptrend? Then that would be different inflection from what you might otherwise have thought. So pay attention to it. You've got this strengthening ADX on the aiding to the downside at this part of the trend, though that is what took prices here rather than indicative of where they're going to go in the future. You put that in combination with what the RSI is doing and this potential harmonic, and you see, well, the steps that we were going through now are just like start with like simple ones. And how do you get to 41, 44? How do you get to $50? How do you eat a fucking elephant, right? The answer is bit by bit. And the first bit is getting the 236. The next bit is above a 382. Break out of this formation. Aim for the golden pocket. Go for the measured move. Break that horizontal. That's your AMC TA, and it's brilliant. It's brilliant TA, and it's a brilliant video. And tonight is Tadpole Games. It's Tadpole Games. It's Tadpole Games. So you get that amazing TA. It's well good for us, well professional. It can hype you up to fuck, and that's just the actual data. And then later on, we've got Tadpole Games. Tadpole Games. Tadpole Games. Game number 2. Coming tonight. I can't wait. Tune in for that. Tell your friends. If you're not there, I'll hate you.